Hi, everyone, and welcome to this week's episode of Money Moves. First, I'll go over this week's price action. I will talk quickly about the unemployment benefits that are going away at the end of the month. Of course, we have to talk about the Rona, and along with the Rona, let's talk about some of the treatments. And then, of course, I will go through each of my accounts, starting with my high yield savings account, Worthy Bonds, my taxable lending club account, and IRA account, my Fundrise account, and of course my M1 Retire account, and my higher yield savings account. As always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like buying this 4-bed, 6-bath mansion in Myrtle Beach, or if you're just getting started on your financial journey, definitely like and subscribe. It has a very bright white kitchen, and I also don't see a refrigerator. As you can see, it is an open concept. It has a nice fireplace and a spot for a TV. It does have a weirdly narrow master bedroom that leads to a long hallway to the master bathroom. The master bathroom is very nice, but for some reason the sinks are on opposite sides. It also has an outdoor shower, so you can go for a swim in this beautiful pool, or take a dip in your hot tub. It's currently on sale for $4.9 million. To keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. Looking at this week's price action, the S&P 500 was basically flat. It was up 0.5% over the week. In the middle of the week, it was down almost 2%, but finished up just over 0.5%. Looking at the candlestick chart, you can see basically the same thing. July 6th, we were right around that 316, 317 price, and we finished at 318.04. Moving on to the first piece of news, the $600 per week and extra unemployment benefits will go away at the end of the month. I've talked about this a few times, but it's finally official that the Trump administration has come out saying that they do not want to incentivize workers to not go back to work anymore, and that they will allow this to expire at the end of July. In terms of the markets, we should understand that there will be less liquidity going to some of the people that need it the most. But at the same time, these people do need to go out and seek a job, and they should not stay on the government's dime forever. In terms of the markets, less money going into the hands of consumers potentially could mean less sales and maybe lower earnings for Q3. Moving on to the Rona, Dr. Scott Gottlieb says that 1 in 150 Americans are infected. We had the largest single-day cases at 63,200 on Thursday, and this graph really shows that trend. This is the 7-day moving average, so it's not quite at 60,000 yet. You can see the US and Asia are right there, just above 50,000. Europe has tapered off, and Africa is currently uptrending. Despite all of this, I still hold my stance in terms of the Rona. I just don't see a way that we're going to be able to get around this. No matter how long we lock down and continue to print money and hand it to people to stay home, there's going to have to be people that run the society, make the food, and there's going to be risks. I'm just not sure that we can get around it. Anytime that we open the society and the economy, we're going to be right back in the same situation as before we locked down. And for this reason, I just don't think we're going to go back into a lockdown. The government can't afford it, and even if they could, I don't think people would want to do it. And something that's not mentioned in that article is the current Rona deaths per day, currently sitting at below 1,000, which continues to downtrend since May. Moving on to the last article for this episode, Gilead says new analysis says remdesivir reduces Rona deaths. It says here a 62% reduction in patients with severe Rona. They said for the trial, they compared to patients who were sick at the time and received normal standards of care. This compounds their previous studies stating that remdesivir reduced the duration of the Rona, and now they are stating that it preserves life. The final point here is that the FDA issued an emergency use authorization on May 1st, allowing patients with severe Rona to take it prior to the completion of these studies. All right, moving on to my first account. This is my high yield savings account. I don't talk about this every week because there's not a lot that goes on with it, but I just want to put out the reminder that if you have a savings account and it's not a high yield savings account, then you're throwing away free money. You can see here my interest credits. While they're not a lot of money, that is free money that I'm not working for, And this money is just going to sit here anyway as an emergency fund. So it might as well sit here and make a few bucks. Moving on to worthy bonds. This is kind of my second tier of savings. If I had to use all of my high yield savings account money, this is the second pool of money that I would pull from in that kind of a situation. Looking at the weekly reports here, you can see last week I made $10.40, which is a little more than the week before it because these bonds compound daily. Moving over to my smaller account, you can see it makes just over 25 cents per week. And that's because there's $270 invested. In fact, I've only invested $260, and someone used the link in the description to get a free bond. So congratulations, and thanks for supporting the channel. On that note, if you are interested in bonds that pay 5% and that are fully liquid, there is a link in the description to get a free $10 with your deposit. Moving on to my Lending Club account, you can see here it's back over 9%, and it's also back over $17,700. So this account continues to do well despite the Rona. If you're interested in what's going on with Lending Club, I did do a Q2 review for them, and I will link that in the description below. Taking a look at the holdings for this account, you can see I have $175 in cash that hasn't been issued yet, $17,120 in current notes. In grace period, I have $190. In short-term late notes, I have $46. And in these long-term late notes, I have $141. And you can see how they calculate here. So in actual late notes, I have $345, and they expect to get somewhere around $141 back on that, which is what they use to calculate your total account value. So my actual account value should be $18,080. But because of all of those late notes, you can see here they decrease $390 to account for what they think is going to be charged off. Looking at the holdings here, they haven't changed much from last week. Still 6% A, 16% B, 43% C, and still a big 32% D notes, and then just a couple of stragglers left in E and F. In terms of term, I still continue to focus on 60-month loans, and I will always take those first. Moving on to my Roth account, you can see here it still says 28.3%, and it just got over $6,000 in total account value. This is still crazy. I can't believe it stayed this high for this long, but I'll keep riding it. Moving over to my holdings, you can see here I have $100 that haven't been issued yet. In grace period, I have 3 notes or $47 worth. In very late notes, I have $28. And then overall for this account, I've only had 2 notes charged off so far, which is pretty crazy. Looking at the holdings, I'm currently 7% A, 22% B, 37% C, and 33% D. Switching over to term here, you can see most of my notes are in 36 months. And I explained this in the last one. I was getting this account set up quickly, and I wanted to invest as much money as I could. And because of that, I had to choose 36-month loans just because those were the notes that were available. Moving on to Fundrise. Last week, my appreciation was assessed, and that was a little bit over $300. And then this week, I received my dividend, which was a little bit over $22. So those 2 payments allowed me to stay on track with my investments. My monthly investment into Fundrise will go in next week, and that will be more than the $216 it says here that are required. So that means I'm still on track to be at $750,000 by May of 2040. Looking at the historical, I didn't make any deposit this week. It just ticks up a little bit each day, which is how they assess the dividends, and then they're paid out at the end of the quarter. Moving down here, you can see my dividend was paid out. It was $22.97. I'm going to keep the Fundrise review short today because I'm going to do a full Q2 review of Fundrise on Wednesday. So make sure you're subscribed so you don't miss that video. Moving on to my Retire account. You can see here over the past week, it's up about $50, and most of that is market gains because the S&P 500 was up 0.55%. So it's keeping up with the market, basically on par. Going to overall, it's up almost 2%. And you can see here, actually, the earned dividends are what's making up for the market gains. If it was purely market gains, I would be down right now. But because of these earned dividends, I am actually in the green. I did not make any changes to this portfolio this week, and I'm still waiting to see if the market is going to retrace some of its rally. Moving into activities for this week, I mentioned last week that I had some dividends that I needed to get invested, and since M1 Finance requires $25 at a minimum to be invested, I had to make a deposit. So I deposited the money to get it to that $25, and then that money was invested on Monday morning. And then I got some more dividends, so I deposited another $20 to get it to that $25 mark, and then those were invested on the 9th. Taking a look at what stocks I've been buying: Federal Realty Income Trust, Chevron, NRZ, Simon Properties, Main Street Capital, Realty Income Corp, Aflac, ExxonMobil, Shell, and Store Capital. A lot of these are REITs, and that's because the REIT industry has been pretty much beat down more than most industries, and it hasn't really recovered the same way the rest of the market has. Moving on to my higher yield savings account, you can see over the past week it's actually down a little bit. And that's because I have a pretty large position in Realty Income, and that stock was down a little bit this week. You can see I have a little bit of a cash balance here. I've decided that I don't want to keep depositing into this account. $14,000 is about where I want to keep it at, and I'm going to start putting the rest of my money either into my trading account or into my retire account I just went over. Going back to overall, this account is still up over 7%, and you can see here the dividends versus the market gains. Again, this week I didn't make any changes here, and I still have a lot of short-term government bonds that I can potentially sell out of if the market drops again. Moving on to activities here, you can see I received a bunch of different dividends, and that's because I own a bunch of different bond ETFs. Each of these ETFs have bonds from different locations in them, and whenever those bonds pay out, then the ETF also has to pay out. So you can see a lot of these are low dollar values, but they're repeated. So I'm getting dividends from the same ETF on the same day, but it's really due to the bonds that are in the ETF that are causing that. Also, I did have one buy this week, and I think this will be the last time that I really deposit money to get it to the $25. After this, I'm just going to let it get to $25 on its own and then invest that money. Just so you can see what I've been buying here, it's all bond ETFs. I'm not buying any stock in this portfolio right now. Taking a look at my overall investments, my stock percentage went up by 1% and my bond percentage went down by 1%. And that's reflected here. You can see stocks went up a little bit and bonds went down a little bit. Lending Club went back up, REITs went down a little bit, and cash went down a little bit. In terms of total net, I'm down a little bit, and that's mainly because of normal spending. So let me know down in the comments section what you think of the news segment. Is the Rona going to put us into a second lockdown and a second market drop? Or are we going to find enough mitigations and medicines to help stave it off? Also, let me know what you did with your money this week and what you're buying. Of course, none of this is financial advice. This is all for entertainment purposes. Make sure you like and subscribe if you got any value out of this video. And let's get to the jelly. So today's jelly is the haka, performed by the All Blacks, which is the New Zealand rugby team. The haka is a wartime dance from Maori culture. It was made by the tribes down there, and it has been carried on into a lot of New Zealand culture, and specifically their rugby culture. So here's what that looks like.
And now the All Blacks just waiting for the French to peel off the track.
As you could tell, there is a lot of tongue going on, but despite that, it is pretty intimidating. And that was actually done at the World Cup, where the All Blacks played the French team. Let me know in the comments below what you think of the haka. Definitely like and subscribe if you got any value out of this video, and have a great day.